if we don't get a deal, what are your expectations? What could the hit to the broader economy be?
I think we're already seeing the impact of higher U.S. tariffs because India's exports to U.S. have been contracting for the last couple of months. In some product categories, we've seen export diversification, but on the whole, there is pressure on the labor-intensive sectors in the MSMEs, particularly. So, cash flow, profit margins for these companies is under pressure. Capex is getting delayed. I think over the medium term, though, as India tries to diversify its export, we will see some diversification as an offset. But if India were to continue at a 50% US tariff, then on an annualized basis, we think that it could be around 0.5 percentage points. Nevertheless, when we look at the next 12 months, India has also seen a lot of counter-cyclical policy easing in terms of, interest rate cuts, liquidity easing, macroprudential easing in order to boost credit. So I do think some of these factors will offset U.S. tariff over the next 12 months. And over the medium term, the focus remains on export diversification.
Sonal, one quick question of, exactly what you spoke of, supporting exporters and other reform measures by the government. It seems cognizant of this potential pressure on growth. And so we've had, through the course of this year, the tax cuts, more recently, the labor reform measures, direct and indirect support to exporters. Is that going to be enough? And is there something else specifically that you're looking forward to from the government reform agenda point of view?
I think a lot more in the direction of, improving ease of doing business. So I think, the committee that has been set up in terms of decriminalizing a lot of the laws, we would expect more to come through on that front. On factor market reforms, we've seen the moves on the labor market. We could potentially see more on land reforms, for instance. Also, in terms of attracting more foreign direct investment into India in more sectors, inviting foreign investment in sectors like atomic energy, more investment in insurance, allowing more investment in banking sector going forward. So I do think a mix of ease of doing business reforms, factor market reforms, attracting more foreign investment, while trying to boost domestic demand and increase self-sufficiency on the supply chain and the GVC integration. So it's going to be a mix of everything. But essentially, the signal here is that India remains open to business.